Yesterday, S&P Global assigned a B- credit rating to MSTR, the first ever rating of a Bitcoin treasury company by a major credit rating agency. This marks a historic milestone for digital equity and digital credit, which are equity and credit instruments backed by Bitcoin. For the first time, a traditional institution has evaluated a corporate balance sheet built around Bitcoin as its primary reserve asset and translated that into a rating recognized across global credit markets. This is significant because institutions allocating capital in the $300 trillion global fixed income market can now begin evaluating or even considering digital credit as a legitimate category of fixed income. Credit ratings are the language of institutional capital, and the inclusion of a Bitcoin treasury company within that framework bridges the gap between the traditional fixed income market and Bitcoin. One fascinating detail from S&P Global's official press release is that the agency explicitly stated it deducts Bitcoin assets from equity when calculating adjusted common equity. In other words, MSTR received its B- credit rating without S&P attributing any positive value to its Bitcoin holdings when assessing risk-adjusted capital. This means this initial rating was achieved while treating Bitcoin as if it were not a balance sheet asset at all. This makes the development even more remarkable. Over time, as rating agencies begin to recognize Bitcoin as a scarce, durable, liquid, and globally fungible form of collateral, they may start to assign it some measure of creditworthiness. If MSTR continues to operate successfully, service its obligations, and demonstrate resilience during periods of Bitcoin price volatility, it could establish a strong historical record supporting higher future ratings. Taking this together, this historic moment shows that Bitcoin-backed capital structures are quickly becoming more credible. The recognition of MSTR by a major rating agency paves the way for future Bitcoin treasury companies to issue digital credit, a new class of over-collateralized, transparent, liquid, and globally accessible fixed income that aligns the traditional fixed income market with Bitcoin. In fact, this could be a critical inflection point bridging the $300 trillion fixed income market into Bitcoin. Thanks for watching, everyone, and see you next time.